Hey now, welcome to the Growing the Future podcast, where our future is always bigger than our past. Today's episode centers around a leader in an area of agriculture that is near and dear to anyone who's ever grown a crop. That is, of course, land. She is the CEO of a company with a very unique business model. Area 1 Farms invests in farmland and operations with top performing farmers and adds value to its land base through improvement. I love that bit. We're going to talk about what farmer doesn't love land improvement. That is sexier than home renovations. Area 1 creates long-term financial stability by delivering high-risk adjusted, inflation-hedged, non-correlated returns. I don't know exactly what all that means, but it sounds really good to investors, all while building the future of Canadian family farms. So there's elements here that we all know and love: the family farm, land, growing for future of generations. Great themes. But she is a Rhodes Scholar and a Fulbright Scholar, and she holds degrees in engineering, business, and law. Today I'm going to talk to her about what it takes to become a highly educated CEO of a very entrepreneurial company with perhaps what you might call an unorthodox business model, what that business model looks like, and where the puck is going in farmland and the world and everything under the sun. It's going to be a very interesting conversation. Welcome to the show, Joelle Faulkner.
Thanks so much for having me.
I'm excited about this episode. We actually spoke a little bit in a sort of a past life of mine where technically I sold a sprayer to yourself and a farming partner out here in Manitoba.
Yep.
That was an interesting process, and I was wondering a little bit about how it's been for you getting into agriculture. We can touch on that, but as an entrepreneur, first question, as an entrepreneur, what does it take? What kind of drive and motivation and talent and intelligence and grit and determination does it take to get 3 degrees and a bunch of awards and all these designations and become a CEO of an investment company as a woman in a man's world? How did you do it?
Thank you. So I was just good at school, and it was easier than milking. So when you start out as a dairy farmer, it probably a lot of things are easier depending on what hours you like, and I did really well at school. And for people who are looking at multiple degrees, if you're really interested in what you're doing, it's probably pretty possible. That was the case with me. The business was a little different. I mean, every business, just like every farm, is really hard to build. And so we have what many people will say is like a, so far 10-year overnight success, eventually maybe a 30-year overnight success or 50-year. And everything, like it's, a couple steps forward and a couple steps back. And yet over time, we've been lucky enough to keep moving forward on average. So it's gone really well.
Did you know you were going to end up in this space when you were doing all of this?
Oh, no.
What keeps you going through 3 different degrees?
Oh, yeah. I just really liked school. I called it academic tourism. Was my move. So I did business and engineering in Canada, in London, Ontario, near where I grew up, and then went to Oxford, England for law school, and then a master's in law in California. And the Oxford and California were paid for, like they were scholarships, and so I could really have a fair bit of freedom, and it was a good time to go, and I liked the different places, and I liked the different people, and I liked the different areas. I was just interested in it all.
So you went to school in England and in California. So quick pop quiz, like England or California, what would be
Yeah.
Really?
Yeah, which totally
over California.
California is super interesting, but everybody works really hard. Like harder than they did in England. And so
And this is from somebody who's got 3 degrees and is a CEO. It's like, don't CEOs have to work 80 hours a week and read a book a week and like grind through the weekends?
yeah, that's right. I know, go figure. Well, California's funny because everybody seems like they're not working. Like it's this like sort of laid back thing, and then actually they are working. The best I heard is it described like ducks. So they look like super calm above the water, but their feet are pedaling pretty fast. Um,
They're very driven. Well, that is the height of hustling. If you live in California, you're just driven by sort of entrepreneurship, and I don't want to say materialism because it's a really negative connotation, but I just assume that's the center of the world.
yeah, everybody's looking for a lot of progress.
And England not as much. England is a little bit more laid back.
Oh yeah, no, it was great. It's not. It's just very honest. Like the kind of Canada's self-deprecating ideas get even better. The wit gets better. People spend more time at pubs. Like it was a really good. It was a really good settling point for me.
Well, good for you for getting all that education and seeing the world. I'm kind of jealous. But so the farm background though must color your interactions with ag, or how did you get into having I guess what you guys have labeled as an alternative investment firm centered in agriculture?
Yeah, so I couldn't have done it without a farm background. What coming from a farm does for me is gives me an understanding of the culture of farmers, of why people continue to work this hard in that industry, what parts they enjoy from it, and it gives me a lot of respect for the operators. And I think the thing that our model has, which is partnership with farmers, and the farm partners earn part of the income, but also part of the appreciation of the land on the part that we have invested in. That's kind of the same idea as how you would incentivize like a tech CEO. And for a tech CEO, we totally, as a society, think that is completely normal. But for capital-intensive industries, it's really, really abnormal. The idea of appreciation to not entirely go to the investors is pretty unusual. And I don't think that approach could have come from anybody who didn't start out in farming, because I don't think they would have had the respect or the understanding of how good farm operators have to be to do well in this space.
Well, and that speaks to how unique you guys are. Describe for the listener just how unique you guys are in this space.
Thanks.
How unique are you, and why are you unique, Joelle, in what you guys do?
Oh, so we are really unusual. The main way of investing in farmland is buy land, rent it out. And the concern I have with building a base on rental agreements is that if land keeps going up, which historically it has, then the farmer kind of gets further and further behind from buying every year. And so in our agreement structure, where they're earning 100% of what they own, but then also part of the income and appreciation on what we own, they always get closer and closer to buying out at least part of the farm that they're farming. And that's the piece that makes us really unusual. It doesn't have built in, like there's no rental rate, there's no interest rate, there's no fixed fee. So it's pretty easy to build a profitable farm if you're starting with an equity, like fully paid for equity base, which is where we start. And that approach, I always say, like, if you're growing just a little bit and you can swing it with debt has never been cheaper. And it's a really good way to do it. But when you get past the debt point, there aren't other good options. And we are the other good option. And that takes a bit of a view that, like, groups that buy land and rent it out, or buy land and rent it back to farmers, they have a view that, farmers want to take money out of their land and put it into the stock market and build a balanced portfolio. But I haven't had that experience for sure. So I think, build your farm as much as you can, but if you need to double it or triple it because you have the next generation coming and you have multiple kids interested, or you do a lot of land cleanup work and that isn't something that banks will fund, then we're a great partner.
Well, I love how you said in a previous interview, I actually caught you on the Ready, Set, Grow podcast with my good friend and mentor, Joe Dales, and great guy to connect with. And you said on there, look, folks, I love your candid honesty. It's very attractive as far as, the whole sales process or gaining trust. And it speaks to your experience in agriculture, you said, look, folks, you don't want a partner, but if you are in that position where you need a partner or could see an advantage from a partner, we're the best partner you could ever have. So if I'm a farmer, why is it? What are the reasons that I would want to partner with you, even though default is don't get a partner?
Yes, so for the most part, there's two. You have an opportunity to grow, meaning there's a neighbor that comes to you with land for sale that you would want to buy, but you can't swing it with debt. Either the bank won't do it because it's too much debt for you to handle, or the bank will do it and you're not comfortable with that debt because maybe even though the bank's agreeing to it, it is too much debt for you to handle and be comfortable with. That is situation one, which is, as most places, farms only trade once every 25 years. So if you don't buy the place that you have an opportunity to buy now, you won't get that again in your lifetime. And so if you have the opportunity, and the question is, I would love to do it. I would want to do it if I had the money. I don't have the money, then we're a great option because we will put in the remaining money that you don't have. We own it with you. We operate with you. And then over time, you buy us out. So you eventually own it. That would be most people's goal. And the question, depending on the size of the growth, is can that happen in 5 years? Usually not fully. Can happen in 10 years? Maybe. Can happen in 20 years? Almost certainly. But you secure that land now so that you can do that.
Wow. So you guys actually exit the agreement over time. I didn't understand that.
Yeah, so at the beginning, everybody thinks they'll buy a little out every year. As it happens, they usually find other pieces that they're buying for the first bit, and then they buy us out later. So for the most part, somewhere kind of around year 10, year 6, 7, 8, 9, 10, somewhere in there, they start buying us out. And then the way we have it planned is you kind of start buying out like a big chunk at year 10, and then another big chunk at year 15, and another big chunk at year 20. That's sort of the theme.
So you would just be getting to the completion of some of the initial agreements.
Yeah, exactly. Yep.
And are those, but the interesting thing that you said is, are these people liking this format so much they start to expand that concept and say, oh, I can.
Yeah.
Oh, perfect. Yeah, that's cool.
It depends. So you only expand up to what you actually want to farm.
Right. This is
and
true.
Most people don't have I want to grow to some infinite amount. There's very few people who you'd say, can you handle, do you want to farm 20,000 acres? And they can see themselves doing that and they can think that they're good at managing it. Like, that's a ton of land. I think most people, especially as you start thinking kind of Western Canada, with the size of machinery now, probably you need to be over 3,500 acres just to make machinery line work. Maybe in a couple years that's going to need to be 5,000. Like, there's numbers around there that people usually do end up kind of getting to. The second place where we're really helpful is that land improvement piece you touched on. So we do a lot of this in areas with timber. So buy land that has been timbered. Now it's just stumps and a mess. It's going to take a lot to clean it up. But when you do, the soil under it's good soil, and you'll have a great place. That is totally within the realm of how this all goes and works and what works well. Banks won't finance it because it's not going to come into production in the next, they need cash flow in the first year or the second year. This isn't going to cash flow till year 3 or 4 or 5. And so we focus a lot on that work because, again, somewhere where the way some people manage it in between is they're pulling from their operating line. Instead of using it on fertilizer, they're using it on land cleanup. That works until it doesn't work because now you have a bunch of stuff maxed out. You can't service again. You kind of try to navigate with the bank, but it's just not their business to try and do those improvement projects, whereas that is a core piece of our business. And my focus on that comes from 2 parts. I like the way that can build equity value for our partners. And the second is, I actually think and it sounds like it's an area of interest for you, but as you look at the global politics of food, Canada should be providing food to the world. Like, We have a lot of rain. This year, we're waiting on a lot of rain. But generally, we have a lot of rain.
This podcast is going to be published after it rains, so you're totally in the right. I mean, great prediction. It's going to rain on the prairies.
Okay, good, perfect, excellent. I will be very pleased. I've had everybody in my office do a rain dance every night, so we'll do what we can. But yeah, Canada has a lot of land. It has a lot of rain. It has exceptionally good producers. Like we have a really phenomenal group of family farms, and our yields are actually increasing a fair bit. Like, you know, all the different pieces of technology driving that. But my view on the improvement piece is where we have land that is available for crop production, we should try to maximize that crop production because it is exceptionally difficult to feed 7.9 billion people.
And this land improvement piece in scenario number 2 of why a producer would work with you, are you financing land where you see the potential where maybe the banks or other institutions might not, and helping them sort of cash flow and finance this land and or finance the improvements too, or are those two separate pieces?
Yeah. No, both pieces, because you need both. So you're buying land that doesn't cash flow, and then you're putting more money into it to improve it. And it still doesn't cash flow until you have it all cleaned up, and now it does cash flow.
This should be a reality show, flipping farmland. I love it. Right? Well, you don't want to flip it. Yeah.
Well, except you don't want to flip it. I mean, that's the funny part, right? Like as soon as you make it, you finally have something that is exciting, that's productive, that's like all the things. So we have very intentionally stayed out of the idea of flipping land, even though from a return perspective, like if you say like, hey, you know, investors would there be some investors that like that? Probably. There are probably investors that would like that. But we like farming. But if we can build the land for that, we would be keen to do that.
Farmland fixer-upper maybe is more appropriate title. And we're going through that very experience ourselves. We just bought a parcel of land there.
Where?
From Mosaic Company. It's along the valley, just along the Saskatchewan-Manitoba border.
Oh, that's awesome.
And yeah, it's amazing. We just had a big bonfire on it. It was kind of idyllic going there on a Sunday where, you know, we traveled through all the shrub and the old thresher machine that was parked, you know, on the pasture land that it consists of. And there's a bee farm on, like there's a lot going on, and it's really cool space. But yeah, they're going to push the bush, and they're seeding some canola on it this year, but they're going to push the bush. And, you know, for the price that they got that land for, it's pretty exciting to take a, you know, parcel of land like that and start improving it and applying some agronomy to it and getting it productive and making something out of nothing. Because right now, you know, it's an interesting sustainability question. Right now, there's not much going on a piece of land as far as, you know, being productive for mankind, and even really, I don't know to what degree, nature. And so turning it, for us looking at that as farmers, you can envision the productivity and be very excited about all the future crops that are going to come on a piece of land that right now, in our estimation, you know, as people in modern society, is wasteland. It's not producing anything.
Right. And there is, to your point, there is a question of, you know, what pieces do you need to keep for environmental reasons? How do you balance ecosystems? All of those pieces. At the other side, and kind of in that same balance, is how do we feed this many people?
Well, what's your priority? You know, until the policymakers actually go hungry. And I was thinking about exactly that, and I hope you can help enlighten me a little bit. Now, this is going back to an article in the Grain News where a rancher suggested that the politicians, instead of planting X amount of billion trees, they pay ranchers to keep the trees on the land. And I was thinking about that situation. Like, is there some weird Twilight Zone scenario where in the future, you know, the Trudeau government pays us not to push that bush so we can keep the trees so they don't have to plant trees? But what's the trade-off here? Like, trees don't produce canola oil. All these new plants going in at Regina are going to require so much canola. I don't even know if we're going to be able to meet that demand. Are we serving society by just keeping old trees in the dead shrub hanging around?
It's complicated. I think, right? Like, I think that's the part that's actually kind of interesting, is that these are really complicated issues. They're not, the question isn't a local one, right? It's not just what does that landscape look like in that place, or what does it look like in Saskatchewan, or what does it look like in Canada? It's a global question. So on one hand, we need to reduce our carbon, and the work around how land can capture more carbon is totally interesting. And do you do that most efficiently in trees? Do you do it in crops, etc.? There's a whole other question around species and how you do that. And then there's this third piece that does, I think, find it hard to get into the same narrative, which is, how do we feed the world? How do we do it now? Do we need to change it? How do we do it long term? The kind of interesting movement I found recently is a carbon question. And on one hand, there's carbon credits getting issued for more efficient cars. And on another hand, we have the idea of sending recreational space missions up, which use a whole bunch of fuel. Like, how do those things tie together? People who like eating food that's organic, does that decrease global food supply? If it does, is somebody going hungry? Are you okay with that result? And because those issues are so big and so complicated, I think it's really hard to balance them, and I think it's actually really hard to even get them into the same conversation.
Well, and that's a magical rabbit hole we could go down for many hours, I'm sure. But one of the things I'm wondering about, in a more simple, practical basis for the purposes of our conversation and your company going forward, is this affecting your ability to buy land and improve it at all right now, or is it still the Wild West as far as land development goes?
It's regulated by area, for sure. But there are a number of areas where increased productivity of existing land is important, and being both positively viewed by the communities and incentivized in some cases. And food security is becoming a bit of a question, and so how that affects it. We have worked in various communities doing this, very positive reactions. Our partners are interested in it and leading it. The communities are behind it. Often the provinces are behind it. So it for sure depends, but we've only worked in places where this is a desirable outcome, and I do think that the ability to grow more food in this country is important, because there is a very big and very hungry world.
That's the sad part, isn't it?
I think, maybe it didn't look so much like that last year, but it certainly looks like that this year. On one hand, it is a wonderful thing to be able to sell canola at these kinds of prices, right? That's phenomenal and very good for producers post-rain. And on the other hand, I don't know if people who live on $1 a day can afford to live on $1.50 a day, right? These are the really basic commodities. So I'm, bigger issue, bigger questions, but I am very proud of the ability to bring more food globally and increase the production on the areas we have. And we're also looking into places where we can decrease carbon use by reducing inputs and maintaining yields, and how that works, and the new theories around that, and how to test those, and all those pieces. So we'll try to play on both sides to build our own set of balance.
Are you finding the need, or do you have a bit of a platform to try and explain this to folks that are living in urban centers and towers that cannot absolutely relate to agriculture like you can? Is there any need or necessity for that?
Like you said, I'm really straightforward. That plays much better to some people than other people. And yeah. I don't think it is always the most effective way. So I think I have really if you're really interested in the complexity of the issue, I'm actually great to talk to. If you're really interested in a certain outcome, probably on either side, I'm probably not the best person to talk to. And so I had a conversation with a woman who runs an environmental podcast, really interesting, very educated, and her view was the world can sustainably feed 2 billion people. That's what it can sustainably feed. And so everything that we're doing right now to feed 8 billion, close to, is probably a thing that's unsustainable. And so my view was like, okay, so which 75% of your family do you want to let die? Right? Like, but that's actually the complexity. Like, the complexity is if your view is this can't continue, then there's some really difficult decisions that I don't think the argument captures fully. And so it's not that you need to be on one side or the other. It's actually that there's a lot of complexity, and if we can have a conversation that deals with the complexity, and to some extent, like, my view is there will be enough innovation to keep up production. Maybe that production moves a little bit, maybe, like, but yeah, I mean, 2 billion people, like, that's a lot less.
It's never been an issue of supply. And I wonder if we're having the same conversations, as we did in 2008 when, the financial market crash happened and commodities went through the roof as well. That put some people in Mexico out of the ability to purchase a tortilla for that day, or their daily bread, so to speak. Is it the same case 10 years later when we've had, in terms of the metrics of the wealth of the world and people getting more middle class and having less kids and getting out of poverty? If you read the book Factfulness, that metric, along with every other major metric humankind should care about, like dying from pestilence or famine or war, have gotten infinitely better over the last century, but especially the last 20 years.
Food is really important. They're like, as I had a friend who's going through a bit of a rough time, and I called another friend and I said, I don't know what to do. And she said, oh, you send them food. And I was like, what? And she's like, yeah, you send them food. Everybody's happier when they're not hungry. And I think about that a fair bit, and it is actually what I do for a lot of friends now. Like, oh, you're having a bad day? Like, I can send you, like, there's food that comes by mail. There's food that you can get delivered. Like, there's a whole bunch of weird options that I hadn't considered before. So even people who aren't local, but like, food is pretty important.
Well, it not only sustained us through this pandemic, but it's been our friend. I mean, comfort food comfort food and Netflix is pretty much just what kept the masses satiated. And frankly, if you didn't have those two things and we had the same sort of lockdown orders, there'd probably be a lot more civil unrest if you couldn't binge watch the latest series on, whatever you're into, and have some really good food to go with it. But very interesting conversations. But getting back to the nuts and bolts, I want to dissect a little bit more. So as a producer, then you're getting this land that's paid for in partnership with you. Like, you guys pay for this land 100%, and then you're both partnering in the upside, and you guys are collecting a little bit of interest on the initial investment. Is that how it works?
No, not exactly. So the farm partner puts in as much capital as they can afford. So maybe that's 10%, maybe that's 20%, maybe that's 40%, but they are buying it with us. We then put in the remainder of the capital. We own it together. Then we run either a crop share on it, so if we don't own any of the machinery, or we run, or we actually buy into machinery. So now we're right across the machinery bins, etc. And so now we own the operation together, and then they make 100% of the income and the appreciation on the part they own, right? So just like they were operating on their own. Then on our part, they earn part of the income, and there's no rent because it's just equity paid for land. There's no interest. So they earn part of the income and part of the appreciation. And so the metrics, like the way it would all fall out, is in most years and on average, you will do better as a partner with us than if you rented land, because land price keeps going up. And so that extra appreciation that you're earning is actually a thing you never get with rental. There may be years, this is actually, like if we get lots of rain, this is actually that year, where crop prices are so high that the differential between rent might actually be better to have been a renter. If land price were to stay constant and you have like a big profit compared to rent, maybe you wish you were to rent it. Just that hasn't been most of the years. Most of the years, there's at least as much value coming from land appreciation as there was from income. And so trading that, being partners with us on the crop, is more than offset by how much you're earning on the appreciation because of that extra part. The other piece it does... Oh, go ahead. No, you're exactly in the right spot.
I was just kind of curious about why you'd be getting into the equipment side as well.
Oh, because if we don't, you have to own the worst part of the farm. Right? Like depending on how you think about it, most people, so my view, if you could pick whether your money was in equipment or land, you would pick land. But you have to have equipment. So instead of lining it up and saying like, okay, I'm only going to invest in land and you're going to invest in all the stuff that you have to invest in even though you don't want to invest in, right? Just because that's what makes the operation work. What we say is, if you have to invest in it, we have to invest in it. And so if we look at that farm as a full thing, it has land, it has machinery, it has labor, it has all the things. We are going to run all those things together. We are going to have a single set of books. We are going to be partners across it. If machinery depreciates or if an engine blows, that is our problem as much as your problem. We don't think you are going and blowing up your engine for fun, right? We don't think so. We think that's a problem that comes with farming. It's a cost of the business, and I don't want you to be unbalanced to us. I don't want you to have to take the falls and then we get this stability and upside, which has historically been the trade-off. I want to say, if we think you're good at producing and we can understand why you're growing, and you'd like to do that growth on your own, but you can't, and you want us as a partner, we'll be your partner right across the whole thing. And we figure out ahead of time if that doesn't work. So let's say you have land that's $1,500 an acre. And you also have the most beautiful line of machinery that anybody has ever had, and you have 2,000 acres. And so you actually have $1,500 an acre also in machinery. It is very likely that I'm going to look at that operation and say, like, I'm really sorry, but I don't think I can invest in it because I'm too worried about the machinery. Like, I actually think you're probably over-equipped, and that expense is really big, and unless machinery keeps going up, it's not going to work well for us. And we don't think it does well. We don't think that's the right way of managing. We do all of that ahead of time. So by the time we decide to partner with you, we know how you farm, and we actually want to farm with you, and we're willing to take a loss on the places where it happens and a gain on the places where it happens to be partners with you, with the view that you're doing the best you can, and we like how you're doing, and we like the opportunity set, and we like you.
Oh, man. That's a great pitch, and if I was a farmer, I feel really flattered, and this is why you would be the next best partner to having no partner. And this is a big deal because any accountant and lawyer will tell you, never get to partner in your business. It's a terrible idea. We spend half our time setting up partnerships and half the time tearing them apart and separating them in the ring and everything. So to that, you've got 4 provinces, 24 farm partners, 140,000 acres, and 450 million AUM, whatever AUM is.
No, but you're close. Assets under management is what it's called. So that's the combination of debt and equity and money we haven't spent yet.
I should have gone to school like you, but that makes sense. Assets under management. How do you find these people, and how do you qualify them? Like, because partners can be bad for you too. You could have some really, really bad partners, Joelle, that keep you up at night.
Yes, that is a risk of the business for sure. We look at 5 years of financials. We look at 5 years of crop history. We look at why you want to do this. We meet with you a couple times. We usually actually start with a pretty small partnership. So your whole farm is over here. We're going to start with you on this, like, 1 quarter or 1 section, or like not a big deal. we're going to see how that goes. We're going to see if we like each other. We're going to see, like, you're going to see that this all works. You're going to see that you don't actually mind sending us invoices, for example, and hearing us ask questions about, like, oh, interesting, like, why did you do this or why did you do that? Because we're also trying to start learning across our partners. And then by the next year, you'll be in a good position to be like, yeah, you know what? This is totally going to work. We have this opportunity, and it's big, and it matches our farm, and we can figure out the equipment line to it, and here's what all that'll look like. And we'll be like, yeah, you know what? This relationship has worked. We kind of mapped out what that would look like ahead of time. We agree. We're in. But like anything else, it won't be everybody. And so, you know, we don't do anything with quota-based industries, for example. So I can tell people right away when they call, like, oh, I'm really sorry. Like, it's just not our place. Like, we want to be in places that are mostly land, which means, so far, crop or cow-calf. Like, we haven't figured out how to do feedlots. Maybe we will. Not sure. Haven't yet. Haven't found the right partner. Haven't figured out the economics. Haven't, like, sorted all that stuff. But
how diverse is it, though? Or do you have like, would you say you have a very specific narrow band of, like, okay, this is our perfect partner?
Oh, no, it's pretty wide, because I think of farming like picking up pennies. Like, if you think about it, you know, you're trying to make, maybe it's $100, maybe it's $150, maybe it's a little more per acre, right? That's 44,000 square feet. You could basically cover the whole place in pennies, and you have to pick up every single one of them. Like, that's kind of where we're at in right now. And so so there's a lot of farms that have figured out different ways of picking up those pennies. And how we ended up in land improvement is that was one of those ways. Like, the farmer said, you know, do I have a perfect year every year? No. Do I have great crops every year? No. But every year, I clean up a little bit of land, and it builds some equity. And I can't finance doing a lot of it because it's not financeable. But I do a little bit, and I do what I can, and, you know, maybe I could do a little more if we had a partner. And my view is every farm has something, right? Like, when guys sometimes go back and forth between getting back into cow-calf or building up their herd when costs are low, or, you know, there's people who are cleaning seed. There's, like, you just see such a good variety of very interesting farms. And then you have some that are just really good at production. And that's what makes them good, and they manage costs, and they are good at production. And I don't know enough. I don't have long enough in this space. I don't see enough things to know that, you know, these 3 are going to work and those 4 aren't. So we just wait until we see them, and then we work through them, and we try to make them work if we can.
Without naming anyone, what are some of the biggest mistakes you've learned the most from in terms of these partnerships in agriculture?
Okay. Mistakes? I had a lot of them.
You're just going through the catalog
exactly,
here.
Right? Like,
mentally.
We built some farms kind of quickly. Like, I think we actually built ahead of management capacity, so we're really careful about that. We've built, we ended up with theft, right? We have really good control processes around that now, but that turns out to be like a really big problem. The big confusion between fertilizer that we bought and where it should get applied. So it accidentally didn't make it onto our land, which is really unfortunate. So, like, you know, it's all the things. Like, we are going into a partnership. We need really good partners. We are getting much better at picking those partners and managing with them. And the good news for us is we have made more right decisions than we have wrong decisions. And we have been really good at working with partners to figure out, like, where there's mistakes, but they're accidents, right? How do we fix them? How do we actually make it work right for 3 kids to come home if the farm hasn't scaled quite enough? How do we think about the trade-off between more machinery and more labor? Because there is some trade-off there. Like, you could have older machinery and it breaks down more, and now you need more labor to deal with it, but it's an option. And we work with each of our partners to try to figure those things out. And then we are trying to build best practices. And one thing that we've actually had a ton of success with is we've started mentoring. So we've started, like, a partner says, hey, I really need help with this thing. And we say, oh, we actually have a partner who's really good at that thing. Let us put you in touch. And that's worked great, like phenomenal. And the piece that's most important there is that we don't come to them and say, like, hey, you know, we like everything you do except we don't like these 3 things, and you got to change those. Like, the approach is the other way, which is like, hey, this has been going really well. People never want to ask for help at the beginning because they don't, you know, they're worried, like, what are we going to be like to deal with? And what if they tell us, like, hey, there's a thing they don't know, what are we going to think? And we've been way quicker, way earlier to be like, hey, there's going to be a whole bunch of things, like, use our network. You want a partner to talk to? Great. You want an expert to talk to? No problem. You want me to go figure out, like, what practices are actually working to decrease costs right now for guys and to bring you the 10 stories of, like, where that actually worked and how they did it? No problem. So I call our office helpful where possible. So you tell me where you want help, and if we can help you, we will try. And we might get to an answer and we might not, but we will try.
I love that, you know, because I think farming is such a lonely occupation. But all of a sudden, if I'm farming out in XYZ, Timbuk nowhere, I've got somebody with 3 degrees and a bunch of honorary titles and
So,
you know,
it turns out the
investment
degrees,
firm and a
the degrees
network.
mostly don't help.
Well,
The
I get
one place
it.
that people
I get
really
it.
like is I know just
But-
enough about tax to be like, oh yeah, you know, you actually, if you did it this way, that turns out to be super helpful. But other than,
Well, you're a nice person and you can read and write very well. Let's be real. I mean, just
I'm not actually much about either of those things. I am
So
I was much
self-deprecating.
better at engineering than I was at law school. So I'm much better with the
But
numbers.
you know what I'm getting at is having a good partner that has other resources. Like, I love the fact, like, we just reconnected because you guys were asking us about our product as a fit for your producers, and we didn't get an opportunity to physically get in front of your producers, which I would love because I always love that interaction. I love objections, and I want to know what their hardest questions are right off the bat, so you can just dive in. You know, I miss doing that in-person ShamWow so much. But we did have get opportunity. I created a little video for you guys to send to all your producers about our product to see what their level of interest was. And we got some feedback, and we're going to talk to them a little bit more. I love that as a service. Hey, what do you guys think of that?
Yeah, and what's neat for us is we can actually collect a bunch of that information and send it to a couple, get the questions back, get answers from you, get the next set of questions, get answers from you, so that, like, to some extent, we try to essentially perfect somebody's sales pitch before it hits our partners. Because the other side, I need to be right. I need to make sure that we don't use a lot of our partner time on things that don't interest them, because what they do have is lots of people trying to sell them lots of things. At the same time, we have more time to be able to go through stuff and, you know, say, actually, there's this one, the 3 things I don't think, you know, these things I think are going to be harder, but, like, this one thing is interesting. So right now, for example, on the regenerative side, we're trying to figure that out for guys. Like, what practices work? How does it work? What would they have to change? What's the impact? And the biggest impact to me is, like, I think it's rain. I think it's water holding capacity. I think if you could tell somebody, hey, we're going to build soil that guarantees you an extra inch of rain every year because it's just going to hold it. And you can translate that into bushels, and you can see what that looks like, and you can think about it that way. And, like, okay, here are the practices that might or might not do that. Like, that frame is actually, I think, much more of interest. It's a much bigger deal than, like, you're going to save $5 an acre on fertilizer. But getting to that took me, 20 conversations. And I'm not a slow learner. So for me to take that long to get there, like, at least we can kind of frame it. We can figure out what the areas that people are interested in. We can do a bit of that back and forth ourselves, so that by the time it gets to our producers, we can say, look, here's the 3 things that you're going to care about. Here's the cost savings. Here's what yields have looked like. And here's why we think it might be actually interesting. And here's the people who explained it best. So instead of a list of 20, here's a list of 2.
Well, that's very interesting if you can have some influence and see from a different perspective, because that's a huge question for producers right now. I mean, you open up the Western Producer, the first 6 pages are about carbon and regenerative ag and this and that, and you're thinking like, did I miss the boat here? Am I on another planet? Like, should I have FOMO here? Because I'm just doing what I've always done. So I guess why regenerative over organic corporately?
Okay. If I start from a point of, I think Canada should be a global producer for food. And for me, as a personal consumer, like, do I trust if it's legal and we're allowed it that it's probably okay? Like, I'm going to say, okay, yes. Right? Like me, just personally. So that idea of organic, I'm not convinced that that's a super important thing. It gets a lot of value from a retail, like, consumer perspective. And like, whether you sell into that retail market or you sell into a global grain market actually doesn't matter to me, right? We can have partners in either side of that. I'm totally cool with that. I look at that as kind of a retail question of like, what does the consumer want and what market do you want to be selling food into? And organic comes with extra tillage and like some things that I think are a little hard in Canada where we don't have a lot of rain. And so, you know, there's some pluses, there's some minuses, pick where you want, and we will look at producers on both, but it's not that interesting in a lot of ways to me because I actually think they're different categories. Conventional guys look way different than organic guys. Regenerative is interesting partially because it's not totally rules-based, right? There is no certifying body. So what you're really saying is there is a spectrum of things you can do that mean you might use less chemical and you might rely on biology more. And the question is, do any of those things work in ways that you trust enough to try? And once you try them, do they work for you? Do they work into your machinery line? Do they work into your labor line, like availability? Like, do they actually work practices you can change? And I don't need to figure out how it will all work for you. What I need to figure out is, do I understand it enough? And can I have enough of a sense to bring it to you and say, hey, here's what I've learned about this space? Because you're right. There's a lot of data on it. There's a lot of articles on it. There's a lot of publications on it. And I have no partner that's on their hands and knees saying, please let me spend more money on nitrogen. Right? Like, we're getting a call for like, hey, help me figure out how to navigate these price markets. I don't understand them, and I want to see like what the best advice looks like. Totally can help with that. But that question of like, hey, will you just let me spend more money on nitrogen? Like, nobody's saying that. They're saying like, hey, let's figure out how to grow a better crop. Let's figure out how to grow a more profitable crop. Let's figure out like, you know, can I save money here? Like all those things I hear, but nobody has ever called and been like, hey, Joelle, I just would like to spend more money on nitrogen with no outcome. Like, that's not a call I get. So if that's not a call I get, and if on the other side we're saying actually there's a way to use less chemical and more biology to do this thing, then like maybe I can sift through those ideas to say, oh yeah, there are those ways, and here's the success that people have had, and here's the problems that people have had, and here's somebody who seems to know a lot about the space, and maybe you want to call them. Because I think there's something there, right? Like, there's enough data that's showing on it. Like, it seems like there should be something there. There's enough people interested in it.
What's your measuring stick to say, yep, we're regenerative over here? Like, I'm reading this, you know, you've just made your first deal on a regenerative farm. How do you get that sticker? Yeah.
My measuring stick? Oh yeah, my measuring stick is, what do you tell me? Like, how do you identify? If you tell me you're regenerative, you're regenerative. That is my measuring stick, because who am I to judge? Right? And it doesn't, I'm not worried about it, because I'm not saying like I have to work with only regenerative producers. And I'm not like, none of it, matters. I want to know how you look at your farm success and how come you're choosing that, because maybe there are choices you're making that our other partners want to know. None of it is about proving something to the world. So my metric is what you tell me. And then I look at what you're doing and try to figure out, like, is that helpful or not helpful? So if you still called it conventional, but you chose a biologic product instead of a chemical product, I'd be cool with that. And in my books, you're conventional. But also, do your costs come down? Do your yields go up? Like, let me see what actually happens from that. Because the label doesn't matter to me. What I want to see is, what are the practices that work really well to keep up food supply and either bring costs down or bring like some other benefit. And I do think over time there's going to be a real carbon market. I do think, like, there's some things that I think, like, do we have to think about it today? Maybe not. Will it come up eventually? Probably. Should we understand the very leading edge of science? For sure. You don't want to be, nobody minds being like a couple years late to planting canola, for example. But nobody wants to be like 10 years late. So it gives me a lot of time in between to take somebody in our office to like read through the stuff and talk to people and try to figure out, like, okay, in those first couple of years, what are people seeing and what do you need to know about it? Because really good, simple direction is probably valuable.
I love how practical you are, and I think I could see how farmers would enjoy having you as a partner because you have a very reasonable point of view, and I agree with that. It's unfortunate because I think we all get trapped in labels, but is Aberhart Farms regenerative? Have we earned that label in some way? Well, we could take some time and make a pretty comprehensive argument with all the data that we've collected that we are indeed trending upwards in our organic matter and our organic carbon, which would be kind of the two metrics in the soil you could physically measure. Perhaps you could make an argument for a certain level of biology or type of biology or something like that. But if you're growing the yields that we're growing, which is the top of the spectrum for the area and the amount of rainfall and the type of soil, and those two metrics, organic matter and organic soil carbon, are going up because of things like zero till, and we're variable rating our fungicide. And yeah, like my brother doesn't want to spend anything on harsh synthetic chemistry of any kind because it costs money. It's got to be an ROI thing. And it's just interesting, can biologicals supersede the old school chemistry in a way that is a meaningful impact on our bottom line, so to motivate people with our inherent capitalist system versus taking dollars from inefficient bad guys that are polluting to pay farming. It's my fear is, Joelle, are we asking the right questions? Is carbon the thing that makes the difference here? Is this like if we were trying to prevent an airborne respiratory pandemic, 5 years ago, we had some foresight on COVID. What's the questions we'd have to ask ourselves then to avoid what's happened now? It's the same thing I'm thinking about the climate and carbon. Are we asking the right question?
And that one is it's a great question, but how would I know? Right? Like right now, I'm spending a lot of time trying to figure out on things people have already done. Did they work? That's it. That is and so that's a pretty simple question. And even that, I haven't found it super easy. Right? Because super easy is like one conversation or one article. So it's not impossible. And then to your point on like the metrics you're looking at, like you must be proud of that. I'd be proud of that. The way that we look at, when we've been thinking through how do you think about what has greater water holding capacity, our easiest metric is carbon in soil. Like that is our easiest metric. Maybe there are others. So I don't know that the question, like, I think the neat thing about how people are currently applying the regenerative title is that because it's a spectrum, it's not a question of will biology supersede. It's, is there anything that can complement this? Right? Is biology one of the things that can complement that? Are there other things that can complement that? Are there what is the best way of producing a profitable crop? Or what is the way of producing the most profitable crop? And what are some alternatives? And do I want the trade-offs?
Well, I love that conversation, but yeah, I love that you're keeping it practical, and I've never really heard anybody tie it to something so simple and relatable and impactful in the way of, hey, this could get you an extra inch of moisture, which right now is a pretty easy sell. I mean, hey, your soil is going to hold more water.
Not because I came up with that. It's because I would say like, oh, okay, what if we could decrease your costs? And they're like, well, by how much, and how much yield do I have to give up? And I'm like, yeah, that's fair. And I'm like, okay, well, what if we could increase yield? And everybody's like, nah, you're probably not increasing yield. And so I'm like, okay, that's also fair. And I was like, okay, well, if this works, it should increase your carbon in the soil. And if you increase your carbon in the soil, what's that? And there's Steve LaRock. Do you know Steve?
I do. Beyond Agronomy.
So I call him for advice because the guy's a genius. And I said, like, okay, if we did this, and he's like, well, half an inch of moisture is this many bushels, and that's worth a lot. So I think probably your question's moisture. And I was like, okay, let's say my question's moisture. What am I measuring? And he's like, you're measuring for easy, just measure carbon in the soil. I was like, okay. And so but that's not, like, the reason it seems like a straightforward metric is because it is the metric that matters right now to our farmers. Is that going to be the metric that matters to all farmers? No. But I do want to try and make things that straightforward so we have something to measure, and then also to engage in the complexity of the conversation too. But like, let's pick a starting point. That seems like a good starting point.
I love it. Can we hold more water? And Steve LaRock can measure the shit out of that. Like, he's got all the tools to know what's, that's a great metric. I haven't thought about that. Well, thank you for that new angle on that whole line of thinking, because anything that helps, clarify and cut through all the bullshit of the whole space, because a lot of us are just kind of wondering where this is all going. But I agree. It's on a spectrum. It's by degrees. It's what's useful, what makes sense. A lot of this is common sense. The world is throwing out half of what they produce. That's not going to last forever because it doesn't make any sense. And we're growing up as a species. I think things are getting better and we're evolving. But one of the angles I want to touch on too, has been such a great conversation. I feel like we could have went much longer, but as an investor, I wonder what that looks like. So I come to you and I got like what do I need? 20 grand, 100 grand, $500,000, million. I come to you with some money and I say, like, why would I invest with you, Joelle, other than the really feel good things we talked about here today? Why would I put my money with Area 1 Farms?
So this is going to sound a little funny, but I spend where I have our internal team trained to spend the first bunch of time telling you not to. Right? So
okay, reverse psychology. I want it already.
It's not that. It's that to invest with me, you have to give me money on my terms, right? So, which means you can't touch that money for 10 years. So our starting point is 10 years. You can ask me how it's going. I have to show you that I'm not stealing it, right? Like you can check in. I have to give you reports that show you where it is, all that stuff. But the baseline is I'm not giving you anything back for 10 years. Nothing. I'm not giving you a 2% interest rate. I'm not giving you all the profit from every crop every year. I'm not giving you anything. I'm not guaranteeing you anything. And that only works for a subset of people where this is truly extra money. And the reason I do it that way is because we partner, I can't guarantee anything. If I bought land and then I always rented the land out and I rented it for some astronomical amount and the return was 4%, then I could tell you, I'm going to give you 4% a year. And I'd have lots of people who wanted to invest for that because that's amazing. Like, you can't find 4% cash anywhere right now. But I don't, because it's not what we do. And we might have one bad year in a row, and we might have 5. And in between, I'm going to spend a bunch of money cleaning up land, and that's not going to make any money for the first 3 or 5 years. So the first part is I tell you I'm not giving you your money back for 10 years. So can you wait 10 years? And you have to fall into, like, legally a subset of people where you have enough extra money that you're self-educated. Like, there's a whole bunch of pieces. So for the most part.
Is that being an accredited investor? Or is it something more?
Yeah, exactly. Being an accredited investor.
Cool.
but then the reason that you might want to invest with us, so the reason people call in the first place, is the world is right now very uncertain. And the more uncertain it gets, the more people are looking for places that might have not necessarily more certainty, but more difference to other things they already have their money in. So if you have your money in the stock market, you probably also have some money in bonds, which is loans. And those are because those two things shouldn't move together. So interest rates might move one way and the stock market might move the other. And so in each case, you're not so worried because you have some in one and some in the other. And then you might own a rental property. And let's say you're in a city and so, you live in Calgary, you own a condo in Calgary and you rent that condo out. And that's something else. And maybe the housing market doesn't move with the stock market, which maybe doesn't move with the bond market. And they call that non-correlation. The things are not correlated. They are not moving up and down together. And the one very interesting thing about farmland is because it is mostly owned by farmers and because it is producing food, and in Canada that food is mostly going to either feed animals or really basic low-cost commodities, so feeding all people globally. Like you don't need people to be super high wealthy people to need to use wheat or canola. The farmland has tended not to move with residential real estate and has tended not to move with the stock market and has tended not to move with bonds. And so it's what's called very uncorrelated. It is moving differently. And so we get little pieces of people's wealth that they want to put in something that is just different. Not better, not worse, not even necessarily dependable. Like I'm not even telling people, this is always going to go in one direction or you're always going to make money. I usually tell them the opposite. You're not always going to make money every year. There is going to be bad weather. Probably not going to lose a lot, but we're not always going to make. And that idea of different is valuable for some people because they're trying to get certainty that they will have some money somewhere when lots of things are moving around and they don't understand them.
That's a great explanation. And I could see how that has a certain attractiveness, especially in today's world. I mean, these are probably somewhat easier conversations in 2021 than they were in 2019.
Oh, so yeah, that is true. And then the other thing that's been super interesting for while I've done this is this is my personal metric on like knowledge kind of in the area. Newspapers have an agriculture headline now. Yeah, so if you look like, national papers, so Globe and Mail, National Post, Wall Street Journal, like agricultural articles didn't used to have the same type font as other things. It wasn't big, it wasn't underlined, it wasn't a headline, it was an article. And they actually now have the headline, so if you, they'll actually have the headline of agriculture, which I think from a general perspective is super interesting. And that is within under 10 years. So when I started, it wasn't like that. We started seeing it turn to bold, somewhere around 5 years ago. And in the last 3, it's been underlined. So it's this interesting, I know it's not scientific, but from my own anecdotal of how aware are people of the fact that agriculture exists as part of the economy and the world and things like that. I actually think that awareness is going up massively in the last 10 years. And I think some of that is probably tied also to this idea of what are these other corners of the world that are doing things that maybe don't relate to how people think about the economy generally.
I'd agree. I think regenerative ag is a very sexy space to be in, no matter who you are, living in what part of the planet. For you, the entrepreneurial journey, what has it been like for you? What's been some of your greatest wins, losses, takeaways? How has it been for you as an entrepreneur? Usually on podcasts you hear people who are I always knew this would work, right? I started this and I knew it would work and I was always sure it would work and they kept telling me no and I was sure it would work. So I'm the opposite. So I started this. I started
I started actually, my brother wanted to add land to our farm, and the prices where we were high, and so he wanted to look in other places, and we looked, and ended up buying a one-section place. And then he would tell friends, and I told some friends, and my dad told some friends, and we ended up with all these people in what we called the Chevy truck farm, because everybody gave me 30 grand, and I promised them that at the end of 10 years, it would be worth more than a 10-year-old Chevy truck. So it's a kind of an easy promise, right? Like, so, but then I got interested in the space, and I got interested in how people were investing, and I didn't really like it. And I figured at the time that if I do this totally different approach, it is very likely to fail. You know, most businesses fail. Mine was very likely to fail. Being really good at school does actually not mean you're really good at things in the regular world, or particularly in business. Like, those two things do not always run together. And so my theory was, I really wanted to try this. I was going to give it my best shot. It would probably fail. I would probably take a job. I would get a good job because I had a lot of education. It wouldn't be super hard for me to get a job. Like, I wasn't worried about that piece. But if it worked, it probably would work in a big way. Like, it probably wasn't going to sort of struggle along and have like one place that worked, because if one place worked, then, and I could figure out how investors thought, which I didn't know at the time, then I could probably make a whole bunch of places work. But if one place just failed, then I probably just couldn't do anything again, and I would take a job. And so that was my approach. And I didn't like people like the journey. I didn't like it. I really like certainty. I was good at school, so I was, I got like continuous pats on the back for my whole life, right? Because like, you're good at school, and then you do well on this test, and you do well. Like, it's all like very, I got big scholarships. Like, the whole thing was like great. And then it was like, oh, yeah, like, no, right? Like, investors no, and farmers no, and just no. And I had taken a job, and then the job was kind of this neat firm, and they are used to hiring people out of school, and so they give you 12 months until you have to start. And so I took the job, and then I never ended up starting, because then I had 12 months, and the first set of things started, and then I locked myself in for 10 years, because the key to having investors who would agree to 10 years was actually being locked in for 10 years. And I did not understand that the business I had was not, wouldn't pay me a wage. Like, my dad used to have this great joke where he's like, you're the only person I know who has $20 million but can't afford to have a salary. And so like, those were things, there's some in it that like naivety was bliss, but I was very convinced that we were doing something that was interesting, and if it worked, it would be really interesting. And we've stayed on that, and that at each point, I've tried to learn from what we've done and keep growing. And we are not the biggest in this space, right? So from an investor perspective, models where you buy land and you rent it out and you try to get as much as you can, and my view, you kind of overpay for land, and then you get overpaid in rent, and like pieces like that. Those are still bigger than us. They have raised more money than us. That is true in Canada. We only work in Canada, but it's also true internationally. Like, so, but this is going, and it's growing in momentum. And to be fair, the more that people care about ESG, so environmental, social, governance, the best way to have good social and governance outcomes is to have a local operator. Like, it turns out a farmer who actually lives in the community is better at managing environmental and social risks, treating employees well, and treating the environment well than any other actor. And that is not just agriculture. That is also true in other things. So when you look at Ford and Hershey, the reason that those companies at the time made such huge advances on social outcomes, so on like people's living style and wages and time off and recreational parks and stuff, was because they had company towns, And that meant the head of the company lived in the town. And it turns out when you do that, you actually take quite a bit of pride in paying people well and making sure working conditions are good and making sure there are benefits. Like there's all those things. And the reason the reason we need such big regulation now is because head offices are not at plant level. And by having our partnership approach, we keep the head office at the plant level, right? The head office is at the farm with the farm partner. And that means we get great outcomes. And as people get more interested in those outcomes, I actually think it does really well for our approach. And hopefully we'll inspire other people to take our approach, right? Like it's hard because you actually have to be in partnership. You have to be a good partner. But if this inspires a whole bunch of other people to do that, and that means more farmers do better because of it, I'm game.
That is a fascinating story, and I'd love to delve into that more, but our time is running short. But incredible story. It's very interesting how you put a lot of that. But one final question for you is, what do you think is maybe the most surprising, but the most powerful thing for you as a leader, as CEO? Like, what is the thing that maybe it surprised you as you went along? Like you talked about book smarts, but really book smarts that doesn't really apply to working with people and in partnerships and persuading people and dealing with issues. What's the most key thing as a leader?
I have an advisor who I call like with some frequency, for sure once a month. And I can't remember what the issue was, but I said to him like, I just don't know. I don't know how to say this. And he says, well, why don't you just say it? And I said, well, because like my style, like I'm so straightforward that like it doesn't always work well. And he's like, well, I got news for you. You have a lot of years invested in that style. You probably don't get to pick. So you might as well double down. And it's kind of true. It's like, I'm a good person, but like this is the style. Like I'm really straightforward. And I've had to be comfortable with that. And I make decisions that like, might be right, might be wrong, but they're made. And I've had to be comfortable with that. And I go back and try to learn from them. Probably the biggest for me has been being comfortable with the approach that I take to sort of double down on it. I also ask for a crazy amount of advice. Like probably any big decision that I make, I get at least 2 or 3 views on that aren't mine, and then I make my decision. And I've tried to structure our office to be the same. And so we have an extremely diverse office, which is interesting generally and also particularly interesting in agriculture. And each person brings skills, and we actually ask everybody to, we're hiring a new person. We ask a bunch of people to interview them, different levels, different views, etc. It's a style. It's my style. I like it. And as I got more and more comfortable that it didn't actually matter if I was successful or not, like I could ask more. So I'm a little like we see our farmers. Like at the beginning, I like didn't ask anybody questions because, what if like they realized I wasn't good at this thing, and then they'd tell somebody else, or maybe they wouldn't invest again, and within a couple years, like I ran into some big issues, and then I needed help, and then I asked people for help, and then they were helpful, and then I was like, oh, I guess I should just ask them for help all the time, like, right? Like that's the thing is like if it does hurt us because, they decide they don't want to invest, let's say, they're probably not the right investors for me, because probably long term, like my style is my style. And so we are super straightforward, which is why I can deal with some of the complex issues you bring up of like, how do we deal with land improvement? And also how do we think about environment? And also why are we interested in this space? And that idea of both curiosity and genuineness is probably our greatest strength, and the cost is we are exceptionally straightforward. And that does work with some people. It just doesn't work with all people.
I am just really enjoying your response because I literally experienced your style. And I don't know how much you remember about our initial interaction when we met. But for me, I was just chugging along as a sprayer salesman, selling sprayers to farmers, which is largely a matter of the heart. I mean, farmers love iron. They want iron. They associate their success with iron. Like, what do you drive? How does it feel and look and all the stuff we talk. We didn't talk a lot about certain metrics, but when we got involved in making a deal, Joelle, you were asking questions that were just blowing my mind. And they were kind of from left field because honestly, nobody had ever asked me any of those questions. And, you know, I think at first I was kind of annoyed, to be fair. Like, I was like, what? I was like, really? Really? But then I was like, you know, I loved it when I had a challenge. And I loved it when I really had to justify it on a whole completely different level. And I thought you had some really valuable points that made me, you know, analyze or look at things from a different angle. But at the end of the day, you know, the farmer knew how much they wanted that tool. And I think we even left it like you still had a little bit of questions about the whole process and, you know, whether that was the right decision, you know, but I felt that in the end you supported the farmer's explanation and position that he needed that iron. And I'm like, she's come from a really interesting angle, highly educated, looking at this thing like almost like with, you know, newborn eyes, you know, not indoctrinated into like 30 years of my daddy did this and, you know, we've always traded equipment like this and we only run it so many hours and we do the greasing like, you know, because there's a whole ecosystem regarding, you know, equipment on the farm it's like a biome, like it just exists. It's just the way things are done and it's so individual and everybody's so unique. But you were like, I don't have any attachment to any of this. I'm going to ask some really, you know, powerful questions. And that was a very interesting process. So I always appreciated that but the approach was like, whoa. I mean, like you say, very straightforward, very direct, but I think you're right. If it's working for you, and obviously it's worked for you, I mean, $500 million ain't bad in climbing.
But, okay, so here's the funniest thing about that sprayer. You were right. The numbers didn't quite work. They did if the farm scaled. It hadn't really. We had done custom work. It was going to work with the custom work. We never kept up that custom work. So it was oversized for what we needed. The other thing that nobody could have predicted, me especially, is that machinery went up so quickly, 5 years later, it was worth what we paid, which would have never fallen into your set of answers or my set of questions because that was like very unforeseeable. But interesting, right? Like for what it's worth. And so there's also this piece where now with history, I can look at things and say like, okay, do I think that's going to happen again? Like, no, or yes, or if it is, what position do we want to be in? And the thing that killed me about that agreement, I have a really good memory for numbers, not for a lot else, but the thing that killed me is there was no buyout price. Like it was a stated price according to you, and everybody agreed that it wouldn't change. But it actually was never written into the agreement. And so legally, they could have picked whatever price they wanted at the end. Didn't have to be the price like set it in buyout. And that idea that like they wouldn't paper it killed me. Now I just say like, okay, no, this is how this works and this is how we're going to write it in.
So I was right. You had reservations. That's hilarious. I knew you had reservations. It's funny that you mentioned that too. Because the way that works is John Deere owns that equipment. They're leasing it to you. And the dealer controls the buyout. So, you know, the dealer at the end of the lease, often we always told people what the buyout was in principle. And we didn't really, if somebody wanted to buy out, if you wanted to buy out that sprayer, technically we wouldn't have charged you even like $5,000 or $10,000 premium on the buyout. We were always thinking about the long-term business of continuing to trade it. But yeah, there's a lot of interesting nuances to leasing. We did a lot of it. I liked how you challenged all these things where normally it wasn't a big deal. But, you know, I do want to say I could take some credit for being right, you know, because usually I think my pitch to you was like, hey, you're not going to lose money doing this. Like your buyout's going to continue to, you're probably going to be, you know, even equity or have a little bit of equity built in. And I kind of had the same sales strategy as you did. Is like, you have to get 3 to 5 years into this if you want to be a good partner into this lease, so I can roll you comfortably. If you want to roll every year, we can't do that, because the amount that you pay on the front end of the lease is not going to be equivalent to the depreciation in the first year. You're going to be upside down, and then I got to build that into your next lease, and then we got to build it in the next lease, and obviously you're paying on negative equity, which isn't very sexy or fun. But like you say, to your point about being direct, I love that you've embraced that about yourself and you double down and you're making it work for you, because it's pretty hard swimming against the stream of who you are every day in business if you know, you're trying to put that part of yourself on the shelf. Instead, maybe that's your superpower, Joelle. I love how you've been so straightforward about all this. I would be super proud of what you achieved. I feel really you know, great that we were able to reconnect in different ways in the industry, and we need people like you to be looking at agriculture in much broader ways. We didn't even get to like the really big geopolitical stuff. I feel like maybe we've got to catch up again here. If there's significant recent events that warrant another conversation to facilitate, you know, everything that's going on in the world. But I love how you are pitching farmland and Canada as a place to grow food to investors, and the little niche that you've carved out. And I personally know some of the producers that have partnered with you, and I kind of saw their dreams and aspirations that they're having with you, and you were able to facilitate that. So I think, bottom line, if you can go to work and feel good about what you're doing in the world, you're so blessed, and I think you're blessed, Joelle. So congratulations.
Thanks so much, and thanks so much for having me, and for reconnecting. And I so look forward to more conversations.
Love it. Thanks for coming on. Yeah. You